In this video, we're going to take a look at the DXY, which has now begun a trend change officially. We'll look at the indexes, we'll look at gold, silver, Bitcoin, and oil. And we'll start here with the DXY. I'm on a one-day chart right now. And to give you an idea here, I've got this blue line, which is on an uptrend. And this week we bounced above it, and it looks like we've retested it on the week and have closed above it. The DXY was even moving today, even though the rest of the markets were closed. Only Forex open today in the US. So if we go to a 3-day chart, we'll pull back and we'll see how far back this trend goes. My computer needs to load a bit here. We've got this multi-year trend which goes all the way back to April of 2011. You can see that we touched here again in April 2014. We got close in 2018. We touched it and bounced off of it here in August of last year, 2020. And then in November, we dropped below it. We caught support right around here at the 89 to 90 level in this range. And we kind of consolidated sideways until recently when we started to see dollar strength. And then, as I said, this week we finally broke above that critical level, also above horizontal support at 92.50, 92.48 in that area. And so if we can continue into next week above this trend line, then it looks like we could see a pretty good amount of upside on the DXY. You can see in between these horizontal support and resistance levels at 92.50 and 94.10, you can see we had some sideways motion. Once we dropped into this channel back in July of last year, we kind of went sideways for a few months before dropping below. Now we're in this motion. Now I could see us in this motion, this sideways motion, bouncing around for a little bit, maybe a month or two. We could move upwards slowly, or over the next week or two, if this dollar rally has legs to it, then we could pop above this resistance at 94.10. And if that happens, then we could be in for a pretty good rise in the dollar. But we'll see. Hard to make a prediction right now. I definitely think with what's been going on with the dollar, with QE, with stimulus, it's hard to see how the dollar is increasing in its value. However, you have to remember the DXY is an index which compares the dollar with other currencies, primarily the euro. And the euro has been a little bit more weak as of late, but the euro is the largest weight in the DXY dollar currency index. So that's something to remember. So it's not out of the question to see the dollar rise relative to other currencies, even as it loses its purchasing power. So what's really interesting too is to see the dollar continuing to rise, but then as we go to the indexes, you see that the S&P has made new all-time highs, has gone into the 4,000 level for the first time in history. As we closed this week, you see we've been on this uptrend ever since the March low of 2020. And we haven't seen the same pullback on the S&P as we have on the NASDAQ. So I'll go to the NASDAQ in a minute. But here we are in price discovery. We're well above this this support line, which was resistance until recently. We tried to break through in early to mid-February. We popped above for a second in mid-March, and now we are firmly up. We're up above our ascending trend line, which comes from the March low, was touched in November, touched again here in early February, dropped below for a second in early March, and in the later end of March, we're still above that. So it looks totally bullish on the S&P. The same thing on the Dow. We have popped up above our resistance that was established. It's not, I wouldn't say it's heavy resistance or heavy support, considering we've only had a few touches on the daily chart up here. But the Dow is bullish. It supports the idea Even though the Dow is only 30 companies, a lot of the Dow is weighted towards industrials and other things that are now bullish in comparison to a lot of your tech stocks, which brings me to the NASDAQ. And you see here that we've broken out of our triangle consolidation. Remember, this triangle was a trend line that was established by taking these this channel, these trend lines that have been cloned all throughout since the March low, and I've been adding them below as we've dropped down, and it's provided support here and here, as you see on the screen. And we were having trouble getting above this descending trend line, but now we've popped above, and it looks like we didn't even get a retest here on this descending trend line, but we popped above this support level here at, what is this, 13,311 in that area. And it looks like next week we're going to see if this level holds. If it does, then I have a hard time imagining a situation where the NASDAQ at least doesn't come up to test the all-time high around 13,894, and it could go above, it could get rejected. It'll be interesting to see because the trend has been this sort of transition from growth stocks, to value stocks. We've been seeing a lot of pressure on your Apples, your Teslas. What's really interesting, if I actually come over to my NASDAQ charts, what's really interesting to see is Apple has struggled. It has lagged. Tesla has lagged as well. And you might remember both of those in 2020 saw their stock prices rise far and above of everyone else, especially Tesla. Both of them had stock splits, which must have added to the speculation. Both were subject to gamma squeezing from options and things like that. Whereas you see the likes of Microsoft, you've actually seen it increase slowly. You haven't seen those real pullbacks in the same way that you've seen it in Apple or in Tesla. Amazon lagging also in the same way that Apple and Tesla are. But interestingly, Google around all-time highs, both Google and Goog. So it's kind of interesting. You see Facebook flirting with all-time highs. So it'll be interesting to see what happens with those stocks. That, like I said, what has been talked about, the commentary has been this change from growth to value. It'll be interesting to see whether or not that trend continues or whether we're done with that because of what's going on with stimulus and whatnot. Let's take a quick look at the Russell. The Russell also flirting with its all-time high again, just like the NASDAQ broke out of its descending channel, out of its descending trend line. And so we'll see what happens over the next week. Right now, to me, I would not be looking at equities. Maybe if I was looking at anything, I would look at the Dow if I was just buying indexes. And the reason being because the Dow is not as exposed to the tech stocks as the S&P is. I think the only tech stocks that are in the Dow are Microsoft and Apple. And so you don't have Tesla or Amazon, any of those stocks that are lagging right now, dragging it down. Let's take a quick look at the 10-year. I just want to take a look here. What's been interesting here is to see the price action, how it's kind of consolidated now after breaking above. It broke originally above this level here at 1675. I had wondered if it was going to be racing up to the 1.9 or even the 2 level. But you can see in the most recent trading day, you see it really sold down, and it actually closed on the daily chart below this level at 1675. So it's interesting to see what's going to happen to yields now after the favorable jobs report. We added, it looks like non-farm payrolls were up by 916,000. So the unemployment rate down to about 6%. It'll be interesting to see what bearing that has on yields over the next week or two. It could be nothing or it could be everything. And so with that, like I said, any growth names and the NASDAQ overall, it's a little too risky for me at this point. And because of the S&P being heavily weighted towards those tech names, I would stay away. If I was going to be in any index, I would be in the Dow. But even that is not really attractive until we can establish some clear support up here so that we can start taking some positions. Let's take a look at gold. I've been outspoken about gold. You can check out some of my other videos to see what I think is going on with gold. I made a prediction that this was just a bounce, this action that we see right here over the last 2 weeks, 2 to 3 weeks. And it looked like that prediction was coming true. We again crashed down. I shouldn't say crashed. We again fell down below this level at 1704. And we retested our support level here at 1675, which if you have watched any of my other videos, I've had this green buy zone where I said this is the sweet spot to buy gold. I've got a couple different support levels that are kind of my lines in the sand. We've once again bounced and hit that level almost exactly at the same spot that we hit it at the beginning of March. And then we had two really strong up days into this descending trend line resistance, which you can see has provided decent resistance and or support, mostly support. So it'll be a difficult level to break. As you can see, it did not break it here in the middle of March. So it'll be interesting to see next week what's going on. I still think we've got a ways down to go. And I think even though it probably could bounce around in this level, I don't see it coming above this resistance level at 1746. It could, I just don't see it. I think the best case scenario right now in terms of price is that we move along in this channel a little bit. But ultimately, I still think that we are going to see, that we're going to see greater downside. I think that at either this descending trend line or the 1746 resistance, I think we'll reject this and it'll come back down into our box. And honestly, as somebody who is invested into Bitcoin, I hope that this consolidation takes longer because my plan is to allocate at least a substantial portion or a significant portion of my Bitcoin holding into gold at the end of the Bitcoin bull run. So I'm hoping to see this consolidate down a little bit more. But as you can see, we've been firmly down from our all-time highs. And I don't need to show you this because I've already shown it in a bunch of my videos, but you can see this massive cup and we are still forming the handle. And it's not going to take, too much longer, relatively speaking, but eventually it's going to be at the point where we're going to hit a bottom. It's possible that this bounce shows us that this is the bottom, but the price action over the next week or two will tell us what we need to know about where gold is going. If we look at silver, we've also seen it come down as of late. Silver was maintaining this sort of sideways motion, but as of late, we've dropped down below resistance here at 25. And I've got this descending trend line that goes back to the spike high in early February. We have yet to come above it. We've tested it once, twice, and it's possible after this bounce we could test it a third time. And if we can clear it, and if we can clear this resistance at 25, then I think we've got a resistance here at 26.36, and then the next significant level above that is 27.60. So those are the levels I'll be watching to see us get to. If we can get above here, I'll be looking around this level and then around this level. And what happens on silver will be a good indicator too of what's ultimately going to happen on gold. Gold is a much slower mover, while silver is a more speculative mover. And I think too in this environment where we're going to be moving towards a lot more green energy, renewable electric cars and things like that, silver will be in higher demand. And I think that if and when silver and gold start moving more to the upside, silver will lead it to the upside. That's my opinion. Obviously not investment advice, and obviously nobody knows for certain what's going to happen. But my move is in Bitcoin, which has been for the last few days after coming out of a recent dip, has broken out of its bull flag and has been consolidating the last few days underneath this light resistance here at about 59,800. So if we can get above here, we might retest, we might not. Sometimes crypto doesn't retest, it can just go off. Or we could come above, retest, and then resume off. But here it seems like it's only a matter of time before Bitcoin is once again moving to all-time highs and price discovery beyond that. So I'll be, over the next few days, potentially moving this red box and moving my green box here. I move these boxes to follow what's going on with price, what's going on when we reach all-time highs, always being aware of a potential for 30 to 40% pullback. Always trying to be aware of where the next peak near term could be. And so that's that. I mean, Bitcoin, if you're in Bitcoin, you might as well just hold. You should not be trying to trade Bitcoin. It's too volatile, too unpredictable. You should just be holding, and you should hold until the peak, which probably will be, I would say, at the earliest late July, most likely in September, or potentially as late October or early November. That's the way it looks to me. And finally, let's look at oil. Oil is in an interesting place. You see we popped above this blue descending trend line. I'll show you what that is in just a second. It seems that oil is at an important point, much the same that the dollar was last week. I'll show you why. But obviously for the last few weeks or a few months, ever since the March low, I'm sorry, not the March low, the April low where we went negative, we've been we kind of came up, consolidated sideways, and we've been on a tear really ever since late November. And after this move, I think we were due for some consolidation. And I realized last week I didn't talk about this descending blue trend line, so I'll make sure I do that right now. If we go to a 3-day chart and I pull back, what's really crazy is this 3-day chart is showing us that ever since the all-time high of oil back in July of 2008, we've had this descending trend line, which really was a channel. We had a touch in August 2013, another touch in July 2014, a near touch here in September 2018, and here we are breaking out for a little bit above that level, but then coming down below. And so what I'm interested in seeing is oil going to break above and confirm and stay above? And if we do, then that is a massive long trend reversal or long-term trend reversal that is now taking place. So it'll be interesting to see. I cannot, in the current macro backdrop, I cannot foresee any situation where it doesn't break above, retest, and move above. I think that I think that oil can go easily into the 70s, if not the 80s or higher. It'll be interesting to see. But that's what's going on. Obviously, Bitcoin is the play. Oil looks like there's opportunity brewing. And definitely the DXY is showing you dollar strength is back and is the trend for now. So if you trade Forex, that could have an impact long term. We'll see what happens next week with yields. Thank you for watching. That is the weekly market wrap for this week. I hope you guys have a good weekend, and I'll see you guys next time.